Good morning, everyone. Just wanted to go over a little bit of basic information and simplify. And since these are half an hour, just quick little powwows, educational pieces. First, I wanted to go, I've done a PowerPoint. So moving forward, I'm sending Steve a copy of the PowerPoint, and then he can share it with all of you. Maybe it's easier in a form of a PowerPoint. And so let me start with just recapping some of the updates, just to give you all a little highlight that you can keep these items should you want to go back and take a look at these. We got the non-QM loans, which is 24 months or 12 months bank statement program. That's one of the ones that I briefly touched on a couple of weeks ago regarding the fact that we wouldn't need tax returns, and that we, as a self-employed individual, he can either provide 24 months or 12 months of all pages, complete bank statements, and we'll use those to itemize their deposits. And with those deposits, we can come up with a income. So that's for the individual. In the category of documentation, that would be the documentation, that particular self-employed borrower who cannot provide tax returns because they're low, because he hasn't finished them, anything to that effect, or because it does a lot of expenses, that would be the program. It's non-Q, meaning that these are, you can call them portfolios. The rates are higher. They're in the 5s to 6, but it also gives you the chance to have an opportunity for a self-employed borrower who has had weak tax returns in 2020 and or who continues to put a lot of expenses to go the bank statement program. It's a little bit more rate, but it gives them the loan. And that way they can purchase the property. This particular one, again, remember, we go 90%, no MI. We also have the no income investor loans. The no income investor loans are for investors who own real estate now and are looking to purchase another real estate property. We will not require tax returns on this one either. It is based on the investor having experience and having rented properties experience. And the income that we will use will be the income that property will drive. We'll do an analysis with our appraisal unit, and they'll let us know how, the income that is going to be placed for that property is within market, and that should cover the mortgage. We are good to go. Would be a credit report, an application, no income showing, and we would be good to go. And the way to find out if this investor has investment properties or is experienced is we pull a dry report. It's a report that shows us what the customers have in their history of either mortgages or property with addresses, even if they don't have a mortgage. So we would do that after the fact when we start the loan, obviously. You've got your jumbo, which is your dream big. I've done a couple of those lately since some of these homes are going a little bit higher nowadays. Your jumbo loans start at 548 and up. So if you have a loan of 600,000, 700, etc., all the way to 3 million, we do the dream big. It's a jumbo loan, goes up to 90%, up to a certain grade, and then 20% if you get closer to 3 million. But again, that one is a jumbo product that we have. The rates on those are pretty comfortable. They're really pretty within market. You've got your FHA. Just as a reminder, the FHA loan amounts have increased to 402,500. Thank God, because the market is just going that high as far as any property for that matter, most of them anyway. So this just gives you a first-time buyer that wants to go with an FHA that has a little bit weaker credit to be able to do a FHA loan, but the loan amounts are now 402,500. They used to be less, 336, I think it was. So on your conventional new loans, all the way up to 548,250 is called conventional, standard, conforming. Anything over 348,251 will be classified as a jumbo, therefore up to 3 million. But again, these are just to give you a highlight where we are in your conventional and your FHA new loan limits. Keep in mind one last item. I hear a lot about condos, reserves. I get a lot of budgets. Keep in mind that if the the property does not have reserves, we can do the condo first mortgage of 75%, a second mortgage of 15. We do both, totaling 90%. And the customer would be put in limited review. Does not matter if the condo does not have any reserves. This is a way to get around not believing that always they have to put 25% if there's no reserve. No, we are actually helping a little bit on the end and bringing in a 15% second. So we have 90%. They still have to put 10%, but they can probably get a gift for 5, and the other 5 they can put. And that way they can at least be closer to purchasing a condo that doesn't have reserves. Any questions so far? Okay, so documentation. So today's educational event is going to be just a little based about documentation, only to help all of you see what are the most basic documents, give you a little bit of feedback. If you do have questions, please speak out, let me know. Sharing those questions helps me also understand what we might be lacking on my end to help continue to grow on education, help it make it super comfortable for you. So tax returns. Your basic tax returns obviously is your personal tax returns, which is called the 1040s, which we always need all pages when we require tax returns, or your business 10 tax return, which is 1120, and that again will also be all pages. The tax returns are required when a customer is self-employed, and we are going with market rate and not trying to give them the smart self, which is a higher rate on bank statements. The tax returns also are required if the person is on a lot of tips. If the person is, like I had a customer who had Uber, and he was self-employed by Uber kind of concept, so we need it there. You have a person that owns their own business. You have a person that it has commission, more than 25% of their income. Maybe they have a base salary of 20, and everything else they make is commission. That could be the realtors as well. So the K1 is a percent of ownership. When we get business tax returns that we require the business tax returns to do the market rate on a self-employed individual and or those individuals that have all that other type of income, tips, overtime, not overtime, tips, commission, anything like that, that is self-employed. And we do require the K1s, which are accompanied with the business tax returns. The reason why I bring it up is because sometimes they're not in that package, or for some reason it appears that it might not be part of the tax returns, and then we have to go back and get the accountant to provide it. That's what it shows ownership. That shows, because in the business tax returns, there could be 3 owners, yourself and 2 brothers, and each brother has 25% ownership or 30% ownership. So when I look at tax returns, I like to see the K1s. I need to see what ownership is. There's all this money coming to one borrow, or is he splitting it with 2 brothers? And now the K1s tells me only 30% of that business income will be for my borrow. So that's the reason for the K1. The Schedule C is an individual document within the body of your personal tax returns, not the business, which is an individual, which is more, maybe a person that is self-employed gardener, a person that is a self-employed painter, the Uber driver, that individual that really doesn't have like a building and like a huge business going on. It's more a self-driven business. The norm you will see more is Schedule C. It's about the 5th or 6th page of the personal tax returns, and it will give us the gross income less any expenses that the borrower has used, like uniform, gasoline, and whatever net income they use there is the income we're going to populate on the personal tax return on the first page. Any questions so far? Okay, good, okay. And just to keep in mind one more note, the down payment assistance program, when we do use the down payment assistance programs, we are requiring 3 years tax returns. We just had another update training last week and from Florida Housing, where the bond or the grant, which the grant is for conventional, the bond is for FHA, down payment assistance, are requiring 3-year tax returns. And the reason for that is because they want to make sure on those tax returns that the individual has not owned a primary residence in the last 3 years. But here's something I learned new that they have changed on the grant. The person can own a rental property and still do the down payment assistance for them on a primary home. That's huge. So if I have a customer that says, I'm living with my mom and dad, and at the end of the day, I owned a property, a townhouse that I bought 7 years ago, and it's rented, because I moved in with my parents or my boyfriend 5 years ago, and I haven't really owned a primary, but I still own that rental. We can still give that customer the first time buyer down payment assistance program. The tax return will show us they have a property. We just want to make sure that in those 3 years, that property has been rented and that borrower has not occupied that property, and we can still give your borrower a down payment assistance program. Huge, super cool, super cool. Then you have your W-2 salary and hourly borrow. You're typically customer that just has a salary, he makes 60,000 salary, or I have 40 hours a week and I also do 20 hours of overtime. That's your typical W-2 customer. We don't necessarily need tax returns if we have a customer that is in salary or per hour. That saves a huge amount of paper trail. Again, unless that borrower, even if they're in salary or or hourly, owns other properties, then the tax returns kick in. Once down payment assistance, then the tax returns kick in. So those are the, or has a lot of tips or commission besides salary that they make, and then definitely we need to have the tax return. But if it's a straight salary or per hourly, and they're not going to get the down payment assistance, it is usually clear to see that it's going to really be so easy for these customers with just W-2 for 19 and 20, and that's the income we use for them. Then just as a note, W-2 only for the borrowers that do not own other properties or have added tips, commission, or additional self-employed. Because you could have a person that's salary, and I have had them, I'm sure all of you've had, their salary, they work for a company, they work for FPL, and they're in a salary, but they have a little side business of something else that they love doing, and it's giving them money. And then if we're going to use that added income, we need to have tax returns. Then you've got pay stubs. What do we look for in pay stubs? Any questions so far? Okay, what do we look for in pay stubs? We look at this hourly just to make sure, are they consistently in the last pay stubs 40 hours? Some work 36 for whatever reason. It's something to do with the kicker of the insurance percentage that owner pays. That's still fine. I would qualify them on 36. That's what I look for. I look to see if they're doing 40 hours or they're doing 36 or they're doing 20. If they're doing 20, then they're really part-time. We look for overtime. Is it consistent? Is it continuous to give them income for that? We look if there's tips, then that tips will create for me a tax return. If it's more than 25% in tips, if we don't need it, I can just make note to the underwriter, we're not using tip, the borrower qualifies just with the base income. Child support. Many times child support is placed here in the pay stubs because of the court. The court goes through the court, the couple, and they put the child support and they're paying every paycheck 200, 300. That's a debt. That's a debt that I have to take into account. I need the child support divorce decree, and I need to know the age of the child. If the child is reaching 18 in less than 5 years, then the child support is good. We don't count it. But if that child is 7 years old, that's more than 5 years, we will count that child support as a debt. And the last thing is credit union loans. Many times on the pay stubs, customers get a car or get a personal loan with the credit union, and it's a deduction from the payroll. So look at all the things a payroll can tell us. Of course, the only thing I'm missing here is the year to date. We want to make sure from January through my last pay, which say is June, that the customers consistently has the logical calculation of hours or income, just in case there had been a gap of a month or two, or they're new on that job, then it will let me know. Bank statements, any questions? Okay, bank statements, what do we look for? We require 2 months, all pages of the bank statement, even if it's a blank page. Many times you'll see bank statements have 6 pages, 7 pages. Many customers send the first 2, or the first 3, or all of them, and they throw away either the last one, which is blank, or might have some type of literature. If the bank statement says 1 of 8 pages, we are going to look for 1 of 8 pages, 8, 9, all of them, 1 through 8. This is important to remember, so that if you do have that conversation with the customer, make sure you got your bank statement, make sure you focus how many pages, because the bank will need all pages, even if it's blank. If they don't have it, they normally have to go back to the bank to get a copy of the bank statement again, so they can pull that blank page. Or sometimes if we're really in the cusp of getting the next month, we'll just eliminate that one and say, well, when you get the next one, give me the next one, and make sure you do not disregard the blank page or that literature page. I make comment of this a lot because I see it a lot. Buyers, are innocent, they don't know, but it's really what happens in the real world. Large deposits, we'll look for large deposits that will need to be sourced or explained. Any large deposits usually is 25% more of what the person earns a month gross. So typically is anything over like $500. If we see a lot of consistency of these large deposits, we definitely want to see where it's sourced. We want to know if it was a transfer from another account or if it's a gift. We also look for continuing to see deductions of payments. Sometimes a parent is paying a student loan for a child, and they have continuous deductions, or they are continually paying something that is the same every month on the bank statement. The underwriter will look for that. Is there a payment of $283.97? And each of these 2 months bank statement, if there is, she's going to question, oh, that could be a possible debt. That might not be in the credit report, but we need to address it. It might not even be theirs. They might just be paying the student loan for the child. If that's the case, and they're not in the student loan, that's fine, doesn't count against them, because they're not on the student loan. They're just doing the child a favor, helping them. But if they are paying it and they are in the student loan, it didn't appear in their credit report, it appeared in the son's, but they're on that student loan, yeah, that will count against them. Questions?
So if you have a recurring thing, say like you have your phone on auto pay, that's not going to count.
No, telephone, cell phones, FP&L, those things are utility, and those are not, just
possible
loans, student loans, personal loans, credit union loans, anything like that, where sometimes it's a car loan that it doesn't appear on the bank statement because they have a credit union statement, and they moved it from there. Now they're paying it with their Bank of America, and it's starting to show. And so all those little details is why it seems like it's easy, but it is detailed. These are details that we have to look in your files. Some create questions or more documents, some don't. So sometimes we say, well, I don't know, I had another borrow. They didn't ask for this. They didn't ask for so much. It's just we really need to be open-minded. These profiles of each customer, they're a window of their own, they're an animal of their own. Everybody is different. So we want to make sure that, we treat them fairly, ask the right documents, because we are lending money, and try to minimize it, but it is created. My staff and myself will make point to clarify these with the customers, and always feel free to call me if you feel the customer needs more information. I mean, I got on a call the other day with one of the realtors here and the customer, and we took an hour on the phone and we went over all the details. I am good with that. I love that. Why? Because I wanted that customer not to feel frustrated. I just don't know sometimes how much they feel frustrated or not, because sometimes maybe they feel bad and they don't want to say much. But please don't worry about that. We can always get on a 3-way line, and which is what we did, so that everybody's on the same page. And they ended up in a happy relaxed mood, answered all their questions. Okay, so balance. We also look at the balance so we can see if the customer has enough funds or not. You know, sometimes the customer only has $200 and we're trying to do 3% down payment. I need to understand, is there another bank statement? Is there, you know, where are the other funds coming from? Are we going to use the down payment assistance? So sometimes I have a bank statement that's a negative. So we need to look at that too. And then ask why. Sometimes it's just that they have it offset with a savings account, etc. So, you know, we're open to all that. These are things that, you know, we'll give you a copy of these PowerPoints if you then want to ever reflect back to them. And then last but not least, your photo ID. Why do we need a photo ID? Obviously, and for most, we need to make sure the applicant who's applying is the person who's applying. If he's carrying his driver's license and he is his name, whoever he is, then that person by the photo ID, driver's license, will give us that comfort level that that's the person who is applying. Years ago, we didn't used to ask for that. And somebody would come in and apply for someone else. It happened, straw buying. And that's illegal. It's happened way in the past, happened. Many people got jailed because of that. And I only know this because I've been doing loans since 1980. I started as a processor for a high producer many years ago. I moved, he left, so I took over his position and became a loan officer in the 1980s, maybe 81, 82. So I've processed many years, and then I've been a loan officer many years. So I've seen a lot of this stuff going on. Anyway, not to scare anybody, I just wanted to explain a little bit better. Then for the photo ID, we're also looking for a couple of things. The name, we'll make sure the spelling of the name is there, is correct. Some people have a first and last name. Some people have a compound last name. Some people have a middle name. So we want to make sure I have the correct spelling of the borrower. Because sometimes Brown can be spelled with an E at the end. Sometimes a Spanish name can be spelled with an E instead of an I. So, you know, it's important. I like to try to keep the flow of making sure we start the loan correctly with the spelling. I'm also looking for the current address. I want to make sure what address the customer has on his driver's license. You'll be surprised how many times the address on the driver's license is not the address that they live. Could be for many reasons. They just moved. Could be that they never updated their driver's license. Could be that they used their mother's address. All those are reasons. All those are good. All those are acceptable. But we need to then have that up front for the underwriter to understand, why does she have an address in Homestead, but yet she has bank statements in Kendall, you know, so that, and on top of that, we're going to pull credit. We're going to need the date of birth, which will come out of the driver's license. And that way I can also verify if the address on the driver's license is the current one. So when we pull credit, we're pulling it correctly with the date, you know, with the correct address and the date of birth, so we can have a correct credit report. So anything else? Any other questions?
No, that was a good class for everybody. So you guys can hear me. I'm gonna make sure I post this on the YouTube page, and I'll put all these documents on there as well too. If you guys have any questions, please make sure you reach out to Isabel. Either she's in the office every Tuesday if you'd like to see her face to face, or give her a call, send her an email or a text, and she will respond as soon as she can. Right, and then next Tuesday we will probably do credit reports. Let's go over credit reports. So hopefully you can join us and let everyone else know in the office that we might be doing credit reports. Okay, so we can get to know the credit. Hello. Thank you.